Commercial banks and economic development. Commercial banks are considered not merely as dealers in money, but also the leaders in economic development. A well-developed banking system is essential for the economic development of a country. The Industrial Revolution in Europe in the 19th century would not have been possible without a sound system of commercial banking. In case of developing countries like India, the commercial banks are considered to be the backbone of the economy. Commercial banks can contribute to a country's economic development in the following ways. Number 1. Accelerating the rate of capital formation. Banks promote capital formation. They encourage the habit of saving among people. They mobilize idle resources for production purposes. For example, if you keep your savings in cash in your locker, it is not going to help anyone. But if you deposit it with the bank, you will get extra income in the form of interest, and the bank in turn would lend it to any other person who does not have the capital but wants to open a factory. So the person would open a factory, produce something, earn income for him as well as other, and repay the bank. So there would be overall development in the economy. Number 2. Provision of finance and credit. Commercial banks are a very important source of finance and credit for industry and trade. Credit is a pillar of development. Credit lubricates all commerce and trade. Suppose you want to buy a car. It would be very difficult if you have to pay the entire money at one go. However, if you get finance, it would be very easy for you to purchase the car, and the car factory will grow because of additional sale. Number 3. Monetization of economy. The existence of non-monetized sector is a hindrance in the economic development of the country. The banks, by opening branches in rural and backward areas, can promote the process of monetization. Number 4. Innovations. Innovations are an essential prerequisite for economic development. These innovations are mostly financed by bank credit in the developed countries. Number 5. Implementation of monetary policy. Monetary policy can be effectively implemented only through banks. Number 6. Encouragement to right type of industries. Banks generally provide financial resources to the right type of industries to secure the necessary material, machines, and other inputs. Number 7. Development of agriculture. In recent years, the State Bank of India and other commercial banks are granting short-term, medium-term, and long-term loans to agriculture and small-scale industries for their growth. Number 8. Regional development. They transfer surplus capital from the developed regions to the less developed regions, where it is scarce and most needed. This reallocation of funds between regions will promote economic development in underdeveloped areas of the country. Number 9. Promote industrial development. Industrial development needs finance, and banks fulfill the need. Number 10. Promote commercial virtues. The businessman should have certain business qualities like industry, forethought, honesty, and punctuality. These qualities are called commercial virtues, which are essential for rapid economic process. The banker promotes these by granting loans to the organizations having these virtues. And number 11. Fulfillment of socio-economic objectives. In recent years, commercial banks, particularly in developing countries, have been called upon to help achieve certain socio-economic objectives laid down by the state. For example, Nationalized Bank in India have framed special innovative schemes of credit to help small agriculturists, self-employed persons, and retailers through loans and advances at concessional rates of interest.